Later. Let's go over right now to Myles and Jared Blikre at the Wi-Fi interactive touchscreen to break it all down.
All right, Jared, so let's just kind of walk through what we saw today. Basically a 3% decline on the S&P 500, about 160 points off, or 120 points rather, off of those record highs. What'd you see out there in today's market?
Yeah, well, let's look at intraday price action here, which is not that. Oh, there we go. We can see there was a pretty steady downtrend all day. So we didn't really see any capitulation selling or anything like that. What does concern me is a longer term price action. You know, after last week's down week and after today's action, we've seen a lot of technical damage done internally to a lot of the stocks that comprise the index. So that if we look at it year to date here, we can really see some of the levels. And let's take a look at a candlestick chart. This will give us some of the support and resistance levels. Everybody's watching this 2,800 level in the S&P 500 right here. That's the obvious level to watch. Also, I think it's 2725 right here. That's another one. But when you come down this quickly, for instance, I'll give you some figures. Yeah. I think the number of new lows, 52-week lows in the New York Stock Exchange listed stocks came up to 270, and we reached that number very quickly. Then you look at the percentage of stocks in the S&P 500 above their 200-day moving average. That's down to 50. You talk about above the 20-day, that's down to 25%. And so it's going to take probably a little while to find a bottom here. And then you look at the VIX, the way it's spiked up here. We could very well have a top in the VIX, but just because it comes down doesn't mean that we have a top or a bottom in stocks.
Now, we're looking at the S&P 500. Obviously, the biggest decliner on the indexes was the NASDAQ. Tech stocks getting hit here. Yeah. Let's talk about the NASDAQ and then also a little bit about the semiconductors, because they are such a leading sector, a leading space, leading industry when you look at where the market wants to go overall.
Yeah, definitely. The semiconductors tend to lead tech overall. They have some of the highest exposure to the trade difficulties that we're having right now. And it was just 2 weeks ago that we saw a record high in the SOX. That would be the Philly Semiconductor Index that we're looking at right here. So here's that high, but then we've come off, and look, we're down 4% and change today. That's just a huge move. And then you look at the break of this uptrend here, you could say this is a double top, roughly speaking, and the technical picture doesn't look that great right now. Again, we're probably not going to see an end to this overnight, so we're going to have to chop around and maybe find a bottom around these lows right here. And if we can find that, then we can launch higher.
Speaking of technicals, quickly on the 10-year, we saw a lot of action today in the 10-year Treasury, down to those lowest levels we've seen since October of 2016. And really the decline that we have seen in the 10-year over the last couple of weeks, you've heard a lot of people talk about the technical momentum inside that security.
Well, yeah, and so the bond bulls have been vindicated here. A lot of people said, well, we're not going to go down below 2% meaningfully, and here we are, another 25, 26 basis points below that. Now, 1.75% is a technical level of support that I've heard thrown out by traders and economists alike, but we could go down farther. We could see a much farther move here, and it all depends, you know, where's the hot money flowing, because there's so many negative yielding bonds worldwide, and then we see this flight into here. The obvious recipient of this money, gold, maybe Bitcoin, right, and of course bonds.
And of course, it's interesting, you know, on a day when the stock market is down a lot of people at home will see the bond market declining, helping them, right? You have lower mortgage rates, you have lower credit card rates, things like that. This is, of course, why the Federal Reserve says they want to cut interest rates, because it does feed through to the real economy to some extent. Now, just quickly, yeah. Bitcoin, you mentioned it. It was higher on the day, has really been a fascination of financial markets for the last couple of years, up 7% today when the market is lower. The question is, are traders actually going to Bitcoin for safety when stocks are lower? You
know, I wouldn't have said this 2 years ago, but that has the appearance of being the case right now. We don't see Bitcoin traditionally correlated with equities for any length of time, but given the move that we've seen here, and I was watching the 9,000 level down to 7,500 as support for a long time. I was concerned that it was going to break below, but just as we reach this 9,000 level, we start having these trade difficulties, and it launches here. My one concern is this is a Fibonacci retracement of about 2/3, about 61.8%. We saw a similar pattern evolve in December and January about 2 or 1.5 years ago, and that was the top. So to break above, I would say we need to get above 12,000, then we can launch higher from there. Have another discussion about it.
All right. Jared Blikre, thanks for joining us here.